Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's May 25th. This will be our chart lesson for the day, and this is going to wrap up our week. No chart lessons on Fridays, so hopefully you've had a good trading week. We had some fairly nice day today. What looked like was going to be a sure trading range. In the end, I'd still call this a trading range today. It's probably just a two-tiered channel. I don't have this other line. We'll copy it and move it up there. And you can see we made that to the tick, and we ended up pushing just a little bit higher than that before the end of the day. But there's two different ways I got to that target. One was I measured this first leg up, and you find that lowest point for where the trend starts again, and that gives you the point. But since we were in a range right across here, you measure that range, move it up, and lo and behold, we met that to the tick and turned down. But when we came back to this trend line, I actually drew this line off the top, drug it down. I wasn't sure if it would be off of this swing or this one, but these two match right here, as you can see. So that's where you want to keep it until, if it goes on through there, then you move it down to the next one. Um, and we bounced off that to the tick. So turns out that was it. And notice we got a little bit of a bounce here. So I wanted to show that, how you found these targets. They were pretty easy to find. And if you played that, you would have played it to the tick perfectly. Uh, we did end up having a little failed break higher later in the day. But so for all intents and purposes, this is still a range day, but it has an upward bias to it. And you can see that's the reason there's mostly longs in here for the day. We had one reversal pattern off the high. It's not a perfect reversal pattern, but it's still a reversal pattern. I'll explain that when we get to it. But I wanted to talk about two other real quick things, and then we'll go through the trades real quick, and we'll wrap this week up. And just a reminder that not this week, but um, I leave next Friday, so I'll probably trade through Tuesday, maybe Wednesday of next week, and then I'll probably take these. Since I leave Friday, I'll probably take Wednesday and Thursday off to get ready to leave. So I know I'll be here Monday and Tuesday. Wednesday's still up in the air, but that whole following week from the 2nd through the 11th, I'll be gone. So I'll be back in the office, assuming we don't have any travel problems. I will be back in the office on, um, so that would be the 12th. So assuming we don't have any travel problems, I'll be back in the office on the 12th. A lot of times coming back from down there, we get delayed or something a few times. I've been going down there for 20 years now, and maybe 3 or 4 times we've been delayed coming back. So, but yeah, go ahead and mark on your calendar if you want to know why I'm not around this week, why there's nothing being posted, no videos, because I'll be gone that week. We leave on Friday and return the following Sunday, so I'll be back in the office on the 12th. So, but anyway, make note of that. I'll mention it again a few times next week before I cut out. But also, what I want to talk about, two other things. Um, one of them was I want to talk about inside bars. I'm not sure if this was where it was, but I got an email today from a trader, and he wanted to know why a second entry failed. Um, nice second entry. Maybe it wasn't there. Maybe it might have been. I don't know where it was, but let's just assume this was where it was, because this is very similar. He had a real ugly. This is the lowest bar. This is really your signal bar right here. The lowest point in the swing is what creates the signal bar. And if it's the other direction, it's the highest point. So that would be a signal bar. This big green one would be a signal bar. And I'm not saying, make sure you understand this, I'm not saying they're good signal bars, because they're not. But that is your signal bar. And he had this inside bar. It wasn't this big of an inside bar. It was only about a small portion of this bar on his. So this is a little bit different. And he went long above this, and it failed, and he got stopped out. And he wanted to know why. He said he thought it was a really nice entry. And what I explained to him is this is your signal bar. And so this is what drives the trade. And this is a horrible signal bar. This is a bearish bar. And his was more neutral. I think it closed maybe more in the middle. So it was a perfectly neutral bar. And then the next bar was smaller bar, but it did look like this. It opened on its low and closed on its high. And when it broke above, he went long. And this looks like it would have been a 4-tick failure too. And he actually would have bumped off his exit order multiple times before it turned and went down and stopped him out. And that went 1 tick lower. They just ran the stops down here. And then it goes higher, exactly where he thought it was going to go the first time. But he couldn't understand why this failed. Well, understand that this is your signal bar. Now, occasionally you'll see me mark a trade like this, but generally what you've got to make some kind of special kind of entry on it. And in this case, mine looks better than his did, but his just didn't look very good because of this neutral bar and this being more a much smaller bar and being right in the middle. So understand that when you enter right here, you're not entering above the signal bar. You're entering above the next bar to it, and that's not always, and most of the time you don't want to do that. It has to be a special situation, and there's no real reason to enter here. It's not a it's a first entry on my chart. It's not a double test rule yet. You don't get that till over here. There's just several different reasons. There's just not a good reason to want to enter there. You really got 3 bars stacked up, and one of them's a doji. And that's congestion. So this is another reason I always tell people either wait on the double test rule or wait on in this case you would want a higher low. And notice this is a higher low than this one. So he might have looked at that, if this was it, he might have looked at that as a higher low. But again, you want a good signal bar and you don't have one there. So again, it's not a second entry. It's not a higher low. I'd want a higher low off this point. You actually got a little higher low here, but it never broke above it, notice, until here. And then you had a lower high. So you notice that I marked that one. But in this case, you got a little failed break lower there. And it would have bounced off of this. If you drew this line here early, it's bouncing off that too. So you may not have had that until you got the third touch up here. But really, I was playing this as a range at this point, so I wasn't even that real interested in the trend line so much as I was the range. And but I hope that's clear why you don't want to enter there. And the other thing is the higher low. I've had some questions on that. If you're in a range and you're wanting to go long, generally you want to wait on a higher low if you're going long. And notice you got a low there and you got a higher low here. What that's telling you is that prices are stronger here than they were here. So you're gaining strength with that higher low. And so by waiting on that, you get a little more proof from the price action itself that, hey, the buyers are starting to get stronger here. You're kind of gambling when you take this one, but you got a little more information here that, hey, I got a higher low in place, so hey, the buyers are getting stronger. Look, this one closed almost on its low. This one opened higher, traded high, it traded higher, and then closed almost on its high. So that's telling you the buyers are getting stronger. And this was enough clue to let the buyers know, hey, it's time to enter now, and look at it takes off. And if you're coming off the high side, generally you want to wait on a lower high. And notice here you got a big high. If you waited on the lower high, it was right here. Let me find a little better example. Here's one. You got this. Actually, this is a great example here. You got this high, and it looks like a great short. It's right off the previous highs. It's a big bearish bar. But guess what? If you'd have went short there, look what would have happened. You would have got burned, and you'd have been wrong. This is a lower high. It's not a good signal bar. I wouldn't go short there, but it never broke below it. So if you would have waited, you actually would have, you got a lower high here. You might have considered, and you got a confirmation of this little trend line, you might have considered going long there. I wouldn't go long into those highs on a range type day at this price level, but you know that you could probably argue for that one to be green. But by waiting, you got a chance to go long instead of getting suckered into the short, trying to pick the highs and being wrong. So I hope that's clear on the higher lows and the lower high. So off the lows, you want to wait. Once you make a low, you want to wait on a higher low for a better entry. And off the highs, you want to wait on a lower high because you want it to show strength to the selling strength. So I hope that makes sense. And I think in the video yesterday, when I was talking off here, I called it a higher. I think I called it a higher low, or no, it would be a higher low. I called it a higher high. I called it something that was wrong what I called it. So I went back and listened, and I did indeed say something different than what I meant. So um, all these higher lows, lower highs, higher highs, you got to pay close attention to what you're saying, especially myself, because I'm known to make those mistakes. And with my southern accent, some of you trying to listen to what I'm saying anyway you might have to listen a couple of times to get it down. And then if I say it wrong, it's just all the more confusing. So I apologize. But occasionally, I mess up. And used to, you could go back and make annotations on your charts. And I was going to try to do that, but YouTube's changed it. They won't let you do that anymore. So there's no way to go back and put a little annotation on the chart that says I should have said, a higher low here instead of higher high. And, so you can't even do that anymore. I don't know why YouTube, they're constantly changing things, and I know it's probably for the better in the long run. There's probably some positive reason, but I'm a creature of habit, and I hate change. And people will send me cool little tools and things, and I never use them because I'm a creature of habit, and I don't like change, and I get used to doing something a certain way. So that's probably a fault of mine. I'm not trying to make excuses. I'll admit that's a fault of mine. I'm just a creature of habit. I don't like to change things, so. Once I start doing it away, I get in the habit of it. It's easy. I know what to do, and it's quick. And even if it's quicker to reach over here on this little toolbar and click a button, most of the time you'll see me. I'll still go up here because I'm just used to doing it that way. So anyway, back to the chart. Let's talk about the trades. Hope that was clear on the higher low and the lower high issues, and hope that makes sense. Hopefully that was helpful for some of you to understand that the lowest point in the swing is off the lows is your signal bar, and it's the highest point off the swings on your high that's your signal point. So this can't be your signal bar. You might, like I said, occasionally there's special situations where you might want to try to still enter that trade based on this next bar, but this is still your signal bar. And if that's not a good bar and that's neutral and the next one's inside, you're probably, you better make sure everything else is falling in place, and that's just not the case in this one right here. I can see why that would be tempting because it's bouncing off these lows, but previously would have had this up here, and so it's still a little, I didn't move it down until here, and then I ended up moving it back up to those closes right there, and you can see that's where it fit later on too. So these lines will move around some as the day goes on, and you get more price action you got, the more that you've got to work with and make your decisions on. And so sometimes early in the morning you don't have a whole lot to go on, and you go with what you got at the moment and you adjust it as the day goes. So if you'd have had this right here as it moved on down, then you move it down to the next swing low, which is right there. And if it would have come on down here, I'd have moved it down to this one and see if it holds down here. And if it went through that one, then I'd say, hey, then this line's probably not even right. But somewhere, since it fits so well up here and ended up fitting perfect later on, it's probably going to fit somewhere else. It's probably going to fit down here somewhere. So, but anyway, let's talk about the trades. We did finally get a double test here. Notice that's two tests of this low, and it's really not because it didn't even get back down there. So this is really the first test of this low, and you could treat this like a second test of that low with a little failed break lower. So you could have gone long right there, and also you could treat that really like a failed second entry short as well. So, but as always, it's better to wait on the higher low. Got it right that time. Let me think about that. Yeah, I did get it right. You wait on the higher low here, and you got it right here. And now you've not only got a higher low, but you've got a double test of this level, and you really got a double test of this level. So you got two double bottoms there, basically, with a little trap. So I like going long there. We're probably going to catch it back to here. That's your minimum target. And if you get lucky, it may go another leg. Um, and you could have actually measured those legs too. There's leg one. And there's leg two. And guess what? It gets you back up here in the same location. So there's just a lot of stuff on the roadmap pointing to this being a target up here. We may not ever get there. We may surpass it, but that's going to be your first target. And that's how you're going to get to it. When you start to get all these points pointing to very close to the same place, that's usually a good sign. That's what I call, anytime you get more than one or two things going on, it just strengthens the trade. So this was a nice trade. If you caught this one, you could have ridden it at least to these highs, and if you hung on, you could have gone all the way to the next move. Again, I talked about this. You got a new high, pullback first entry. There's a lower high right there. That high is lower than that one, and I said that yesterday, and I think somebody got confused on that. But this is a lower high right here. It's lower than that high. So that's a correction, and that's all I was trying to get at right there. Sometimes some people don't quite understand. I mean, to me, it makes perfect sense in my mind, but I forget to explain it a little more. So that's a lower high. So that's a second entry basically, because it's a lower high. Because here's your new high. You get a correction. So that's your first time it breaks higher is right here. That's your first entry. So then you get a correction. You really want to see it break lower and then make a lower high, but it didn't. But this is still considered a second entry. It's just not a great one. So you might have entered there if you're wanting to be real aggressive. And if you did, you want to, your target's up here. You've already seen your target several directions. It comes back. There's another second entry right here, but this is just going sideways too much, little bitty bars. It does bounce off the trend line. So once again, you could probably argue for this one to be at least green, but it's so close to the high of the day, it looks like congestion. I'm not going to go long there. I'm going to wait. And then guess what? You come up here and you start moving along, and you get that little failed break lower, and notice that low, and you tested it once, you tested it twice, you get a little trap, it's a failed break lower. I like that. It's right off the EMA. It's the first break of that trend line. I like that one to try to get you back up to here and to try to get you to that measured move. And sure enough, where does it go? To the tick, to that measured move, and then it corrects. And you get a lower high right here, but I don't think you want to go short yet. I think you want to wait on that reversal pattern. And generally, I'd like this to push through the EMA, but that's okay. It doesn't have to. It's still a reversal pattern. It's still a failed second entry long. It still comes off the trend line. It's still a bearish bar. So I like going short there. And that's what your smart traders, that's what they're waiting on, a reversal signal. And notice what happens then. The bottom falls out of it. And it also confirms that trend line. So you got multiple reasons to go short. And that's another thing. I think a lot of people, they read, generally when prices are above the EMA, you're looking for longs. And when they're below the EMA, you're looking for shorts. But that doesn't mean you can't take a short above the EMA or a long below the EMA. If you get the setup and the context of everything else is falling in place, you can go short into the EMA. You need a reversal pattern, failed, a trap or something like that, but you can do that. So don't think that you can't go short. I'll get that question inevitably every time I point out one like this. Well, you went short into the EMA. Well, you can go short into the EMA. The key is you got to know the context and what the price action is telling you. And you got a channel here, and you just came off the high. So where are you probably going? The other side. You've got a range here, and you just came off the high. Where are you probably going? To the low side of the range, which would be here first. And if you get through there, you're looking for it to maybe come down here. But guess what? It bounces off this channel. It turns out the channel is the main play. they're both really equal plays and today because they're both, neither one of these patterns really overtakes the other one. In the big scheme of things, this is a trading range day, so maybe the range does take precedence, but you just don't get a lot of trades off it. So most of your trades are off this. Uh, they're fairly equal, is the way I would put it. So, but anyway, you got that short there. You ride it, and where are you expecting prices to go? What is our when prices turn down here? What are we thinking? Where did they just come from? So, and coming off the high of the channel and off the high of the range, what should we expect to happen? Well, you expect prices to test this part of the range first, and if you get through there, you're looking for this to be your next target, the trend line, and if you get through that, your next target would be this one down here, but the trend line held. And notice you get an overshoot of this channel here. You get what looks like a, if you draw this line exactly right, it looks like you get a little bit of a close outside here, but it's so close, it's, you can't count on that. It's so close, you got to say, okay, I can't say for sure we've got a convincing close outside. But you get this big overshoot, and then you're going sideways, and guess what? You got these lows right here, and you go higher, you come back and test them once, you go higher, you come back and test them twice, and on top of that, you get a little failed break lower. So that's enough to go long right there. But then guess what? You get a bounce off this trend line, and then you get this nice bullish bar. I wouldn't go long above that one. You could really count either of these as your signal bar because they're all equal low. But this technically is the only one that's I'd be willing to go long above. And off it goes. And then it kind of comes back right here and gives you a little bit of a trading range, a little bit of congestion is what I'd call that. And it breaks lower, turns up, I'd go long right there. And I'd have my trend line drawn off those first two swings. And then guess what? It keeps bouncing until you get a close outside. And it tries to go higher multiple times there and fails. Comes back, and there's really two legs down here. There's a leg down, a little correction, another leg down. So there's a hidden second entry there. But prices, the next bar is inside, and they can't break above. So I'd wait and see if we break above and come back and you get a higher low. And guess what? You get a higher low there. It turns down, and then it turns back up and goes out the other side. I like going long there. And then you get your reversal pattern here. Notice what happens. It pushes through the EMA, pulls back. You get a failed second entry short. It's right off the EMA. It's right off this little trend line. You've got confluence there. Your signal bar doesn't matter since it's a trap and a reversal pattern. Go long right there. And that gives you another scalp. And it takes you into the close of the day. And nothing else much happens. You actually come back again here. But by that time, you don't have enough room between here and here, so I wouldn't enter right there. But yeah, hopefully that was helpful today. But pretty good trading day. Not a lot of trades today, but it was fairly simple. Your targets were easy to find today. I say this channel was pretty easy to find, but it may not be for someone that's new. So this is a spike in a channel, but it's also a range. So and generally one pattern will overplay and be like the dominant pattern for the day, and the others will be more shorter term channels, or I shouldn't say channels, but shorter term patterns. But in today's case, you really had two equal patterns, the trend up and the sideways stuff. But overall, we just kept going higher and the EMA is going up. So maybe the channel is the slightly more dominant pattern with the range working inside of that. So that's the way I would call it at the end of the day. But yeah, this, the more experience you got, when you sit there and you look at this chart for hours on end, day after day, for a few years, it'll start coming to you. Some people just, they think they want to know it tomorrow, and they read the manual, and they've watched a few videos, and they got it down, and you're just a kindergartner. So make sure you grasp that and understand that, because I don't care how good I don't care how high your IQ is, how book smart you are. Generally, the higher your IQ and the more book smart you are, the longer it takes this, because trading goes against common sense. Nothing common sense about trading works, and that's what gets people. They're used to using their common sense and their deduction skills, and they just don't work the same in day trading. I'm sorry, I don't know why. I can't explain it, but everything that looks like common sense, it works just the opposite. And what most people do, they're afraid to go long until they get confirmation. And they really, once they've seen this moving up here and getting up in here, now they're starting to say, all right, I got confirmation. We're going higher. This thing's going up. I understand now we're in an uptrend. And they try to get long in here, and it turns down on them. And so then they say, well, I need to get short. Right about down here, they give up and they reverse. And just about the time they reverse, then it starts going higher again. And they just do that over and over and over. And they don't understand that you got to do just the opposite. Well, when this thing starts going up, unless it's off a key entry point early in this move, you don't want to be entering. You got to learn to enter down here, and then once it starts to reverse, start entering the opposite direction up here. You can't wait till down here to go short. You got to figure out how to get short up here. And you can't be going short. See, most people see all this selling and moving, and they're thinking, I got to get short. And they get short right in here, and then it goes the other way. So you really almost have to do just the opposite of what makes common sense. So that's my take on it. That's the way I describe it. That probably is not really how it is. There's probably a better way to describe it, but that's my way of describing it, that it came to me in my head. And generally, when I try to teach this stuff, what I will do is put myself, one thing I am good at doing is putting myself in somebody else's shoes and trying to determine what they're thinking, how they're feeling. And that's been a good skill for me that I've used over the years as a manager, as a thinker, as just trying to be a person that cares about other people's feelings and thoughts. And that's the way I've done it. And I don't know if everybody can do that, but if you can learn to do that, it's helpful, and it's been helpful to me in my, I've worked in the corporate world, I've worked for myself, I've worked as a trader. I mean, I'm a jack of all trades, really. I've done it all over the years, and that skill has helped me. So, if you can do that, try that for yourself and see if it helps you. Put yourself, if you were in that person's shoes, how would you want to be treated? How would you want to react? How would you want to feel? That kind of thing. And it's worked well for me. So, and that's the way I try to teach. So I hope that's helpful. Sometimes it probably comes over well. Sometimes maybe it's not the best way to teach it, but that's the way I know how to do it. So that's how I do it that way. I didn't mean to get off on that tangent, but just a little bit about me. So anyway, I'm going to wrap it up for the day. We'll be back again to do it Monday. I'm done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.